The way to think about it, it's like a Mexican standoff. Everyone's pointing the gun at each other. So all the participants of the network are independently running the Bitcoin software code, and they're enforcing the fixed supply against each other. So thinking about incentives, no one has the incentive to allow anybody else to print money, and they have every incentive to prevent somebody else from printing money. So it does say it in the code, but Bitcoin doesn't have a fixed supply because the code says it. It's because everyone who's opted into the system is also running code that if I were to create some version of Bitcoin that says there's going to be 21 million and one, everyone else would look at that and say that's invalid. That's not consistent with my rules. And so it's this idea that it's not just because it's in the code, it's because adversaries are running the code and they're enforcing the rules against each other, and that's what keeps everybody honest.
Parker, I'm really excited.
Yeah.
Glad to finally do this.
Yeah. Been talking about it for a while, so glad to be here.
No, yeah, you're kind of a big deal.
Wow.
You wrote a book.
Yeah.
Gradually, then suddenly.
Gradually, then suddenly.
Provide a brief summation of this.
So Gradually, then suddenly is a framework for understanding Bitcoin as money. It's a very logically ordered approach to explaining Bitcoin. Talks about it from the bottom-up fundamentals, how to think about money, how to think about Bitcoin in relation to money, the properties that Bitcoin has that make it money, as well as addressing all the common misconceptions that typically trip people up. And then a section devoted to understanding the problem, because oftentimes people think about Bitcoin as a solution in search of a problem, but it's because they don't understand the problem with fiat money. So the book also addresses the problem that Bitcoin solves, which is the problem of printing money.
Yeah. And we have some huge problems with fiat money, as evidenced by everything that happened early this week.
Yeah, it's a symptom of the problems of the fiat money.
Yeah. So what actually happened? And I want you to explain this to somebody as though they like wear a mask alone in their car, or as though they are voluntarily going to a Kamala Harris rally.
Well, so there were a confluence of things that happened, but one of them, and I'll describe it. I'm not as seeped in this world as I was 4 or 5 years ago, the old fiat world. But
yeah, you had a Wall Street job.
Yeah, but functionally, the Bank of Japan raised interest rates 25 basis points, and interest rates in Japan have been set at 0. Japan, like wherever the United States is, Japan's worse.
Sometimes negative even.
Yeah, but there's a very popular trade amongst hedge funds where they will essentially short the Japanese yen, and then they will buy U.S. treasuries or buy other U.S. assets, including the stock market. And basically, with the idea that the Japanese government, just like the U.S. government, and the Japanese central bank, just like the U.S. central bank, are going to have to print money, and the Japanese central bank is the worst offender. And so there was a surprise interest rate increase, which causes the currency to temporarily strengthen, even though it's against other currency complexes. That caused a bunch of people to have to essentially cover their short on the yen position, which then had to cause them to sell the U.S. stock market. And the global financial system is all connected. But the way that I would that's a lot of detail stuff. The way I would describe it to someone is there were a lot of people betting on the currency to lose its value because the Japanese currency the Japanese central bank has to print a lot more money, even more money than the United States, to keep their system propped up. And something happened that surprised the markets, and it actually caused an unwind of selling of financial assets in the U.S. because so many people were betting against the Japanese currency. It's all just a charade. Like it's a joke that everyone has to pay attention to what central banks do, and that so much of human energy is tied to, speculating in currencies, because that's the only way people can figure out how to make money rather than just delivering value to people in the real world.
Well, yeah, and in a lot of other countries that are not the U.S., and we're going to get there soon, men who provide for the house have a second job, and their second job is speculating on currencies and speculating on assets because of how weak the currency actually is.
Correct. And that's one of the parts of the book. It's actually chapter 5, Bitcoin is the Great Definancialization. This idea that because our money is printed constantly, it doesn't hold its purchasing power. And so once somebody's done with their normal job, they have to go home in between the hours of 6 p.m. and 10 p.m., try to figure out how to speculate and be an investor rather than just being able to have a job that provides for themselves and their family. And it would if not for the fact that their money is engineered to lose value.
Yes, and then you start investing money in these like bullshit stocks that have no value, or
That-
you
that
buy
you know-
shit
you- that-
coins
that
that,
you
are
know-
total scams, or you buy memes, hoping that you can YOLO your funds into something that's not even real to just make a quick buck. You make high time preference thinking a lot worse. And then once you eventually go bust from it, because if you're going to do that, chances are you're not paying full attention about TA and when to sell and when to buy and all this other stuff. People, it's like going to Vegas. The house always wins, and then you wind up becoming even more in debt, even more miserable, even more financially stressed. And then that's how you kind of, not to sound conspiratorial, that's how you get people to start begging for communism, going to Kamala Harris rallies, and wanting a central bank digital currency. If that was a lot, or
Yeah, I mean, I think directionally all correct, or directionally I'd agree with everything. I think that, again, at the root level, it is that if you have a job that you spend 40 hours a week working or 50 hours a week working, it is unsustainable if that job does not provide for you and your family. And that the reason why it doesn't is because they print money, and that even if somebody, it's not to say that investing is bad, and it's not to say that people that work normal jobs aren't capable of investing. The point is that they're forced into investing because they know that they might not know the mechanism how, but they know that their money loses value, so they know that they have to put it back at risk. And like even the most basic thing, it's like, yes, what people end up doing is speculating in things that are very far out on the risk curve to the point of things that have zero fundamental value, like shit coins, and people that trade them are nihilists because they're just hoping on a prayer that they'll be the ones that get lucky, but they also know deep down that it's a zero-sum game. But even if you set that aside, that's what functionally a lot of people do, even investing in things like Apple stock, like somebody that is spending 50, 60 hours of their week working either an hourly job or something that is very tied to the hours in the day, like to understand the complexity of Apple's business and whether or not more people are going to buy cell phones or not, the biggest company in the world, the company that's viewed as the least risky, it's just not something that you have time to do as a professional. Now, if you come along and you're like, hey, I really like that company because I use it and I can tell that the world's going there. Again, it's not to say that all investing is bad. It's just that being forced into a position of having to invest your savings because you know that your currency is deteriorating is the root problem, and that you're not actually solving it by, after you work your day job, putting all of your savings at risk. You're basically routing around your own problem rather than solving it, and you need to figure out that your money's broken, and the only way to fix that solution or that problem for you is to find a real solution, which is a better form of money, which is Bitcoin.
yes, I perfectly agree with that. Why have so few people actually taken this warning and adopted this? Because it's obviously better money. Like when you actually like read the book, when you go down the rabbit hole, when you actually learn, when you spend a few hours, right? Not even days or months or anything, but when you just spend like a small modicum amount of time to just learn about this, it's very obvious that it's a better form of money. It's more secure. It's censorship resistant. It's scalable. I could send Bitcoin to anybody around the world. You have the Lightning Network. I can send it at I could send Lightning payments for even like a cup of coffee for almost no fees. It's just better. But very few people actually use it. They'll, even when I get pedicab rides, I offer discounts for people with Bitcoin. And people will sometimes comment. More often than not, I'm getting made fun of by my customers for wanting to accept Bitcoin. They like laugh at like it's some kind of novelty, like it's the biggest risk asset of them all. They'll say things like, I don't do Bitcoin. And I'm like, what do you mean do Bitcoin? It's money. What are you talking about? But why is the adoption lagging so much?
Well, I'd say that I think it's obvious to us that it's better money. It's not obvious to most people, and I think that we got to have some grace for people where it's like Bitcoin is not easy to see. It is not very intuitive as money, initially because it falls outside of the norms of what everybody associates with money. And so I think that to start there, which is, the dollar as an example is a terrible store of value, but to, people that have always relied on the dollar, they view it as stable. They might know that it loses its value over time, but they don't interact with it in a way where it loses 5% tomorrow, even though over the period of time that they're saving in it, it does. And so I think that the reality is that Bitcoin is not obvious to people as money, in part because it's as volatile as it is. Although one of the things that I explain in the book that people miss is that it's this key idea of distinguishing in people's minds between, because I think that's the key thing. They can't see Bitcoin being as money because it is volatile, and then secondarily, but I think to a lesser extent, because it's natively digital. But if we just, to like help someone that's listening to this podcast, the primary thing that makes them not be able to see Bitcoin as money is the fact that it's as volatile as it is, and they equate the volatility with Bitcoin not being a good store of value. And where those people have to break their mental barrier is that volatility and an asset's ability to store value are not the same. And so when you think about this dichotomy between the dollar, which is a very bad store of value, it's engineered, it constantly loses value, it just doesn't do it today volatilely. Bitcoin on the other side is a beautiful store of value, but it's highly volatile, and it's difficult for people to reconcile that. And the way that I help people reconcile that is realizing that it is just a fact that Bitcoin is both volatile and a phenomenal store of value. Like if you just look at it over time, you cannot deny that it has stored value over long time horizons. So then the question becomes for people, it's, well, how do you treat it as money if it is volatile, even if I accept that it stores value? And the reality is that you don't have to save all of your money in Bitcoin. And that is also something that people struggle with, because a lot of people only have savings in dollars. So then they're thinking, well, I have to go to this other extreme. And that's not the reality. You can start saving 1%, 2%, 3%, and then eventually you'll have most of your money in Bitcoin and be perfectly fine with the volatility, just like I am. But it is that it doesn't walk like a duck and quack like a duck, or at least the duck that they thought was money. And the reality is their money can be easily printed, and they think that it's money when it's just the shittiest form. And oftentimes people just have to learn the hard way. It is difficult to see, but that doesn't mean that more people aren't figuring it out every day. And so I really focus my time and energy on like helping that marginal person, that next one to, twice the number of people understanding it, and then 10x.
Yes, and I always try to explain to people that it's not a get-rich-quick scheme. It's a preserve. It's not even a preserve your purchasing power way to save. Because if you want to just preserve your purchasing power, you just buy gold, because it just kind of correlates. I mean, and I know gold has problems, but if you just want to preserve the purchasing power, like a 1-to-1 ratio, gold is a better analogy. It's more about like expanding your purchasing power and enhancing your purchasing power over a longer time horizon. Then the volatility actually is your friend, because it's a really volatile asset that trends upwards, and it's a really volatile asset with a fixed supply. It's a really volatile asset that gets harder to produce every 4 years. And with all of these factors being said, you're creating scarcity, you create demand, and when you create a finite supply of a scarce asset, that is very hard to manipulate or change or anything like that, the value has to go up through math, and anytime it doesn't, it's just an opportunity for you to level the playing field. It's kind of how I look at it.
I think that's fair. I generally steer clear. I mean, I do talk about gold in the book, but only to anchor someone relative to the dollar, but I do think that you're describing it correctly. There's another side of it that people think it's like, because it's natively digital, this is all one great hallucination, and it is a little esoteric to think about this idea of finite scarcity. It's like there will only ever be 21 million Bitcoin. That's why Bitcoin stores value, because it has a finite supply, like you mentioned. It is also difficult for people to wrap their head around it. Like, what do you mean there's a fixed supply? How can it not be undermined? That is a difficult question to answer. But at another surface level, like one of the things I meant to mention, which I failed to, is one of the things that people struggle with when we say that Bitcoin is this phenomenal form of money. Like first breaking through, detaching this idea that something volatile can also be a great store of value, and that Bitcoin is that to a T. But also, what people associate with money is being able to spend it at places. And if they don't see that you can take your money and spend it, to get coffee or to get gas, it's harder for them to conceptualize. And what I tell people to help them understand that is that there's a very logical order in this equation. First, people have to understand why Bitcoin will store value before they're willing, like yourself, to accept Bitcoin as payment. So it's not a chicken and egg problem. It's that in this early day of Bitcoin, someone first has to grapple with this idea of Bitcoin having a finite supply and that being why it stores value, but also because it's brand new to the world, it's naturally volatile, but more people figure out that what it functionally is a form of money, they adopt it over time. So while it's volatile, it is storing its value. But if you think about this logical order, if you as an individual did not understand, if I saved a portion of what I made today in Bitcoin, why that would hold its value into the future, then how could you ever turn around and accept it directly as a form of payment? And I describe it that way to think about the person who's not yet, started to see Bitcoin as money, that struggles with this idea that you can't go to the corner store or the grocery store and spend Bitcoin. But if you accept that first you need to understand why Bitcoin stores value, then it would become very intuitive for you to accept it. And people aren't all going to just wake up tomorrow and accept Bitcoin as payment. Our rancher down the road in East Austin takes Bitcoin. KNC Cattle. They take Bitcoin as payment. My doctor in Central Austin, Ultra Personal Healthcare, they accept Bitcoin as payment. You accept Bitcoin as payment. There are other people in the city, Mod Bikes accepts Bitcoin as payment. There's this education gap that has to be bridged first on converting and storing value over time, and then thereafter one and then the next. But someone's always going next because there is truth and objectivity in the world, and knowledge distributes as a function of time. More people are figuring this out, and so what people are going to start to notice is the Bitcoin accepted here, the Bitcoin preferred here sign. And one day it's going to open up and Whole Foods is going to be accepting Bitcoin, and it's going to be a lot easier for people to understand Bitcoin as money when somebody big moves like that in a meaningful way, like an HEB or a Whole Foods or just something that, or a gas station, right? So, I approach it with grace. Like, it both seems so obvious for people that have been steeped in it and that have had that mental unlock, but it is still an esoteric concept. It is still difficult to see, but it all gets solved with education and time.
No, absolutely. And somebody who has gotten into it a little later than you, it's actually better for me if it takes time versus if it happens right off the bat, because I have a chance to accumulate more and build a better foundation for myself either way.
Yeah.
So I'm just saying this, like,
everybody gets Bitcoin at the price they deserve.
Yes.
And so the people who get in early, they figure it out, and then they start to accumulate, and then the next generation or the next wave figure it out, and you do start to approach it as every time Bitcoin dips, it's when I'm selling my books or when you're writing your pedicab, it's like when the price of Bitcoin dips and I sell a copy of my book for $30, I'm getting more Bitcoin.
That's how I look at it. I have a pretty simple approach where I'm like, hey, the cash that I get goes to household stuff, right? The Venmo payments I get go to my business, and the Cash App payments I get go to buying more Bitcoin.
Yeah.
And that's just how I've been approaching this since like 2020, 2021.
Yeah, and you're also describing the way that people manage volatility, which is you're converting a portion of your savings to Bitcoin, the portion that you don't need tomorrow or the next day or in a week. You keep some, savings in dollars so that you can spend, and then your Bitcoin is growing in purchasing power over time, and if you ever need it, it's there, but you're saving in the better form of money and you're spending in the worse. But over time, it will be better for all of us, the more people that get on the Bitcoin standards, as you and I both agree on.
Yeah, absolutely. And I mean, I drive a tricycle for a living and I have a house, right? That wouldn't be possible if it weren't for something like this.
Right.
Right.
And that is the idea, that people should be able to save in a form of money that can't be printed. And if every individual in the world or in our local community here in Austin and the state of Texas beyond can do that, then people can actually get off the hamster wheel. They can actually have some quality of life where they're not just working to, like, there's a very big difference working to pay bills and working, doing something that you enjoy doing, and then being able to have savings so that you don't really have to work. You're only working because you want to.
That's kind of how I'm kind of in the middle of of between 2 and 3 right now.
Yeah, it's
because
a process.
I have to, if it were up to me, I would just travel around the country making videos all day, right? But I also love giving pedicab rides, and this job genuinely does make me happy. But I'm having to work from now until all the way through Wednesday because there's a real estate convention, there's a bunch of Moody events, and I'm doing that because I still need to build to continue building my financial foundation.
Yeah, but that's also natural. But right, where it's like you have to save, and you got to work to build up some savings so that then you do have flexibility as your savings grow. But if you imagine that world versus a world where you couldn't actually accumulate savings, where you're still having to do all that work, but you never can get ahead. It's like the fiat trap is like us all like having to do everything just to like scrape by a little savings, and then it basically gets destroyed and we're back in the same position. So it's like when someone's, going from, entering the economy, it's like in the fiat world, they can never outrun the money printer. In the Bitcoin world, yeah, you still got to work to deliver value to other human beings naturally, but whatever you are able to save then can store value. And in that world, everyone just has this more aligned incentive both to deliver value as well as to save value. And at the end of the day, you end up being able to focus more on the things you actually value and want to do. And it's just a lot. It's more fair. It's common sense. And it fixes a broken system.
No, absolutely. What do you say to some of the skeptics though? Because like I'm probably on conservative Twitter or interacting with some of those people a little bit more than you are, right? Just because of like the city council stuff and because of everything else. And there are people that I'm like friends with that are like conservative content creators or conservative like influencers, and I will talk about Bitcoin all the time. I'm like, dude, you got to start accepting Bitcoin for your merch. You got to start putting a little bit of your money into Bitcoin if you want to actually have financial sovereignty, and you want to have a backup plan for when they shut your Venmo and your PayPal down, which is obviously what's happening. And then you'll have people that'll say things like, well, how do you know that they can't just inflate the supply? Or well, how's Bitcoin going to work if the internet goes down? Or Bitcoin was created by the CIA, and if everything is digital, it's just a way to shepherd people into a digital surveillance money. What do you do if the government bans it? All these other things. And I know you went over a lot of this in your book, but explaining these things, in a way that's easily digestible can kind of help get over a lot of this FUD that, that's being generated by people who honestly need it the most.
So I would say, let's break a few of those down. One, I generally recommend, if someone has not figured out why Bitcoin will store value, I generally recommend that they hold off accepting it as payment. It's like continue to go down that journey of figuring out why it stores value. So like one of the things you brought up was, well, how do you know it has a fixed supply, right? Or how do you know, and what I'd like to say, or what I like to say is that Bitcoin has a fixed supply. The important thing is that it can be credibly enforced without the need for trust. And that people need to go understand enough about Bitcoin to understand why that can't be undermined. Again, I go to it in more detail. Won't go into the detail here, but what I would generally say is the only reason why Bitcoin is able to credibly enforce its fixed supply are for a few reasons. One, it's entirely distributed, entirely decentralized. People will say that there's other cryptocurrencies that are decentralized. The point is that decentralization is not trivial. Every other, whether it's a fiat currency, the dollar, the euro, the yen, or every other, 1,000, 2,000, every last other cryptocurrency, they're all hyper centralized. They could change the rules on you tomorrow. The only way that Bitcoin's able to enforce its fixed supply is because there's literally no one in control. No one controls it. So but you have to go down. You
have to go down that rabbit hole and understand that. And there's no CEO. I had a guy on like a couple years ago, and one of the things he said is to undermine Bitcoin was that who's the president of Bitcoin? Is there a senator of Bitcoin? I'm like, well, that's why it's valuable.
Right.
It's because there is no CEO.
And one way to think about this is the importance of decentralization is that it removes trust from the equation. If there were any institution or man in between that you needed to require to have trust in to not print money, men have proven that if they have the ability to print money, they will print money. That is what
Yes.
that is what you have with the current U.S.
Yeah.
financial system.
And-
You have a group of people at the Federal Reserve that you entrusted to manage the money, and if it's not just that it's them, it's that anybody that has the power to print money would print money. So the only way that Bitcoin can work is that it has to work without the need for trust, and that's why decentralization at every layer is important. And there's something also that people miss about this. It's that we only need one form of money. Like it's not a coincidence that or a hallucination that the world converges on one form of money, because if people pair these two ideas, that Bitcoin is valuable because it has this fixed supply, and if you also realize, independent of Bitcoin, that money converges to one common medium, and that because we all have to trade together, then you're not out there trying to find 1,000 different forms of money. And so if Bitcoin does credibly have this fixed supply, and it is only possible because it's entirely decentralized and no one can control it, then you don't really need to go search for the second one or the third one
Yes.
if you've developed an understanding as to why and how Bitcoin
Yeah.
enforces fixed
And-
supply. So it is like to that guy, it's like, no, Bitcoin wouldn't work if there was a CEO. Like the only way that it works is that it's the absence of control. It's the only way that the system can function in a way that could credibly enforce
And
fixed
it's
supply.
in the code too, right? Like the code's open.
It's in the code, but the way to think about it, it's like a Mexican standoff. Everyone's pointing the gun at each other. So all the participants of the network are independently running the Bitcoin software code, and they're enforcing the fixed supply against each other. So thinking about incentives, no one has the incentive to allow anybody else to print money, and they have every incentive to prevent somebody else from printing money. So it does say it in the code, but Bitcoin doesn't have a fixed supply because the code says it. It's because everyone who's opted into the system is also running code that if I were to create some version of Bitcoin that says there's going to be 21 million and one, everyone else would look at that and say that's invalid. That's not consistent with my rules. And so it's this idea that it's not just because it's in the code, it's because adversaries are running the code and they're enforcing the rules against each other, and that's what keeps everybody honest.
Yes, and it's the node operators that is it the node operators or the miners that have to
It's technically the node operators, but miners run nodes, but you don't have to be a miner to run the node.
Okay. So it's a node operator, just to clarify, it's a node operators that enforce the code.
Yes.
Yeah. Are you worried about the centralization of I saw you talk about this with Peter McCormick. How big of a risk is miner centralization, and what does that lead to?
Well, I would always anchor this idea that Bitcoin only works because it's decentralized, and that that decentralization is not trivial, and that's this problem with every other bullshit snake oil cryptocurrency, because they say, oh, it's DeFi, it's decentralized, and they're trivializing that word. And so, but when you think about Bitcoin was started by one individual, regardless of who it was. Like, I personally don't believe that it was CIA. It doesn't really matter once you understand how the system works and that no individual can undermine it.
Yeah.
If
the CIA created Bitcoin and you look at the code and look at the properties of it, then they are the most patriotic organization in America, because that is literally our digital 1776 moment, is having something like Bitcoin. Yeah.
And it would be unlikely that the CIA would actually be patriotic. So it's unlikely that they probably created it. But if you think about, like, Bitcoin originated from this individual, Satoshi Nakamoto. Again, people theorize that it might be a group of people, but it was almost certainly one individual. And then a second person, Hal Finney, joins the network, who's a well-known developer in California. He's since passed away. He was diagnosed with Lou Gehrig's disease in 2011, and I think passed away in 2014. But then think about the third person that joins the network. That Bitcoin started from this point of hyper-centralization. And then with each person that joins the network, it gets more and more decentralized. Okay? And so there was a point after its launch where it was certainly, whether it was later in 2009 or maybe still early 2010, where it was still so centralized that it probably could have been undermined at that point. But now we're at the point where Bitcoin is worth in excess of $1 trillion. There's 20 to 25 gigawatts of power 24/7 they're securing the Bitcoin network. And the point I'm trying to make is that we went from the world where it was one person to 20 to 25 gigawatts of power trillion of purchasing power. That, like, think about the amount of decentralization of people who hold the currency, and recognizing that literally one person controlled all the currency at the beginning, and now it's less and less centralized. And so from whatever point Bitcoin is at today, it's getting more decentralized as it gets larger, as more people demand the currency. And so if there's an area where there, I don't want to say remains centralization, but where there's pockets that we should want to solve for increasing decentralization, is in the mining space particularly. I don't view the current level of decentralization of mining to be a risk to Bitcoin. At the same time, we want every layer of Bitcoin to be more and more decentralized. And so one of the examples is that it's really difficult to build an ASIC chip. So not specific to Bitcoin, but Bitcoin, there are ASICs, which are application-specific integrated circuits. There's application-specific integrated circuits for other industries as well, but there are ASICs that are built by the same companies that build them for all the other industries. It's just that it is a hyper-specialized and hyper-capital-intense exercise, so there's not that many companies that can do it. So naturally, there's like 2 or 3 companies that control the supply chain, but Square and Intel are working on one. There's so much money at stake. It's a annual $25 to $30 billion revenue business in terms of revenue for miners, that every single year Bitcoin mining is getting more decentralized, and all that really matters is the trajectory. Because in 2017, a group of miners, 90% of the miners and all the large service companies that were around at that time, they tried to get together to force a change to Bitcoin. And that was when Bitcoin was worth 15 billion, and they weren't able to do it. Bitcoin is now far more decentralized, being worth $1 trillion, and more people being involved in the mining space, that it is still a source that needs to be focused on and further decentralizing, but it's not centralized to the degree that it could undermine Bitcoin, in my view.
Yeah. What do you say about the people who think that the ETFs are another way towards centralization?
Again, I'd say if you go back 4 or 5 years ago and looked how much Bitcoin that Coinbase had, everything decentralizes over time. Just as we go from a couple thousand people competing for Bitcoin to 10,000 to 100,000 to 1 million to 1 billion to 8 billion. And so really what matters is centralization in this context of the currency supply. And as more ETFs compete for it, as more individuals compete for it, as more billionaires compete for it, as more corporations like Apple and Google, they're not yet involved today, but they will be, that it all takes...
Dell, I could see Dell doing it.
Yeah, Michael Dell started tweeting about it, that it's a problem that solves itself because of that fixed supply of the currency. As more people demand it, just think about, imagine 1 million people had Bitcoin, and the average person could have 21 million, or sorry,
Yes.
21 Bitcoin. Then imagine it's 100 million. Then the average person could only have 0.21, or sorry, 2.1, which one. But like basically the currency gets more and more distributed as more people compete for a fixed pie. And so I don't worry about the ETFs, because Coinbase today holds less Bitcoin, and which is where virtually all, like, the risk is Coinbase, because it's custodying the Bitcoin for 8 ETFs, and Coinbase has less Bitcoin today despite all the ETFs than it did 5 years ago. Because there's more institutions competing. There's River, there's Cash App, there's Fidelity. Fidelity has an ETF and they custody their own Bitcoin.
Yeah, because they don't let you actually move
there's
the
NYDIG,
Bitcoin
there's
Fidelity.
companies there's Strike, there's non-custodial solutions. The majority of all Bitcoin is held non-custodially. So like 60 to 70% of Bitcoin is held non-custodial. People that actually hold the keys. So and Bitcoin also isn't a democracy. There's no vote. It's not a 51% vote like that people get to change the rules. It would have to be an overwhelming majority. And when I think about, it's like Bitcoin security is always as good as its last attack. And so the last credible attack on Bitcoin was the block wars in 2017. And again, 90% of the Bitcoin miners and Coinbase and all the large service companies tried to get together to change the rules to Bitcoin, not the currency supply, but something that would, in their mind, have increased the
Yeah, they would increase the block size to make it. Yeah.
But the point is that when Bitcoin was still in year 8, so nearly 50% of its time being around ago, it was only worth 15 billion, and so it was more centralized at that point in time, far more. Think about 15 billion then of total purchasing power to today over $1 trillion. 90% of miners and all the large corporations tried to force a change on the network, and they couldn't do it. They failed spectacularly, and now the Bitcoin network is 50 to 70 times the size than it was then, which means it's more decentralized, which means it's more capable of thwarting a even larger stress tests of its rules.
Like a 15% attack or something like
Or more like a state actor, like the China banned Bitcoin mining in 2021, and hash rate moved to Texas and other places. It's just every threat to Bitcoin immunizes. It gets stronger. And so when people, and this is to not lose people, is that the most important thing to Bitcoin is that its rules get enforced. The most important of those rules is that its fixed supply of 21 million get enforced. Bitcoin is valuable because it's difficult to change. People have tried to change Bitcoin in the past and haven't been able to. And as Bitcoin gets larger and more decentralized, it becomes harder to change. So it's already really hard to change. And if 10x the number of people demand Bitcoin, it's more decentralized. As the amount of power securing the Bitcoin network goes from 20 to 25 gigawatts to 100 gigawatts, it's going to be even harder to change.
Yeah. I do think another risk that I notice is that everything is becoming very KYC'd. And there are a lot of companies that are accepting Bitcoin. There's more, there are congressional meetings. You have congressional candidates, even people in Congress, senators, even Democrats that are all of a sudden coming out as pro-Bitcoin. But now almost every single company has a KYC requirement. And one of the things that Bitcoin was invented for was to also separate money from state and allow you to transact peer-to-peer without the purview of Big Brother watching over you. One thing that I'm observing is I think that a lot of people are going to inadvertently kind of make the mistake where they're going to, when they buy Bitcoin and start using this amazing asset, they're going to neglect this very important function, which is privacy.
Yeah, and I also think that is a problem that takes care of itself. I think we need to educate about all of it. We need to educate about the importance of the fixed money supply. We need to educate about the importance of privacy. We need to educate about the importance of, there's this term that I describe in the book, commonly used in the Bitcoin world, of censorship resistance.
Yes.
That really censorship resistance is the most important property in Bitcoin. It doesn't really matter if somebody knows that something's happening if they can't prevent it from happening. And that similarly, as Bitcoin gets larger and more decentralized, it becomes more resistant to censorship. And that the reason why I view the KYC, and KYC for those people who don't know is know your customer, it's really the know your customer rules are actually less the concern. It's more the reporting back to the government.
Yes, but that's part of it. Know your customer.
It is. I'm just I'm not trying to be nuanced. I'm just trying to describe like what the actual problem is. That the more the government knows about and can surveil all your financial transactions, the more they can censor you. And so, but the reason why this gets taken care of itself is that today, the way that Bitcoin is typically acquired by people is converting dollars to Bitcoin. That in the future, the predominant way that people are going to get Bitcoin is just by selling their goods and services for it. And that inherently does not have to be KYC'd, right? Like if somebody pays you, it's not just if somebody pays you and you particularly don't want KYC, but you can, when you're not having to interact with the dollar system, it's a lot easier to just only you and the person who pays you know about that transaction. And so Bitcoin's privacy inherently improves as more people accept Bitcoin as payment, because basically the diversity of liquidity, like the goods and services become the liquidity rather than dollars. And there's just in that world, there's less that people can know. It's like going up and doing a cash transaction at the store. Like even if you deposit that at your bank, no one knows who gave you the money. And so it becomes inherently harder to track when everyone's just, pulling out their Bitcoin wallets, paying things for, and that's the way that people are acquiring and selling their Bitcoins, buying goods and services. I think it's something that we certainly have to be conscious of. I do think that there's a version of the future where Bitcoin becomes the standard, that we go back and repeal the Bank Secrecy Act. That's the real problem, the Bank Secrecy Act and the Gestapo-like enforcement of saying, hey, everybody has to have all of their financial transactions reported to the government and Big Brother. Like, the Fourth Amendment is important, and I know the Bank Secrecy Act has been challenged, but it becomes more clear on a Bitcoin standard why the Bank Secrecy Act was almost certainly unconstitutional. If it wasn't unconstitutional, human beings can still repeal it. So I think the more that people understand Bitcoin, the more they appreciate sound money, the more they see the problems and the ills of the fiat system and how increasingly people are being censored, that people will want and demand that be changed. And if certain jurisdictions don't take care of it, it's still not changing Bitcoin's fixed supply. So if the United States government becomes a tyrannical government like the UK government,
what's happening there is crazy.
Then people are going to go to El Salvador. And if people deny that people will move for incentives, they're literally denying the history of America. Everyone who came here left and took some massive risk to get here, and they did it based on incentives.
Yeah.
So I just don't worry about the KYC. It's like, if Bitcoin credibly enforces a fixed supply, every regulatory structure is going to have to adapt around that. And if you are crooked, then the Bitcoin, because this is the other thing, Bitcoin is the most mobile capital in the world. Think about if you're in India and thinking about coming to the United States, and think about if you're saving in gold, you have to leave literally everything behind. You can't move it across the world. In Bitcoin, you can literally take all of your savings, get on a plane and go, and then you can contribute to that economy with your finitely scarce money. It becomes this regulatory arbitrage where, because capital can flee so quickly in a way that can't be controlled, that it forces honesty. And again, when I say forces honesty, it doesn't mean that there's not going to be crooked governments that cut off their nose to spite their face, or that think that they can overcome it. It just means that people respond to incentives. And just like Bitcoin was attacked in 2017, it hasn't been attacked since, that people learn by trial and error. And they can learn that if they do something very bad to their people, specifically as it relates to Bitcoin, the Bitcoin's going to flee, the sound money's going to flee, and then their economy is going to collapse, and they're going to be in a depression.
Yeah. And there are some people in the conspiracy theory side that say, well, that's what they want because they want to create CBDCs and control everything and do all this stuff. But then the backtracking to that, right, or the rebuttal to that, Parker, is that, well, sure, let's say you were like a megalomaniac who wanted absolute control and power over things. You still want absolute control and power over things where life is still good so that you can benefit from it. It's like, I guess one reference is like, it's like, imagine going to high school and being the prom queen, right? How cool is that? But what if you're the prom queen when like everyone in your school has Down syndrome? It kind of is like reminiscent to that. If you're not embracing this technology, and if you're going to cut your nose off to spite your face, and you're going to try to collapse your own economy, which is what a lot of conspiracy theorists say, just to have absolute control over people, it only makes sense to a very small degree, and there's so many rebuttals to that. Is what I'm trying to.
Right, but I think the problem in that logic is that if the currency collapses, I shouldn't say if. When the currency collapses, you actually lose control. Because the currency, working to a degree, albeit in a way that is rigged to work against people, as long as it still functionally works, you can exert control. As soon as it collapses, you lose control. And so there will be a point where all fiat currencies fail, and the control that they were extracting from that system will go away with it. That does not mean that they won't try to extract similar control from the Bitcoin side, but there's this key property that they can't control, which is the supply of the money. And it doesn't matter, like literally any dictatorial government could stamp down like North Korea and have their people under their foot, right? And eventually those people are going to have to revolution to get their fucking rights back. Like at some point, some people have to fight for their freedom. Money is a tool is what allows for peaceable coordination. It doesn't take evil out of the world. So it just gives you a tool to basically keep people honest in a way that's like, hey, imagine the United States government. Imagine they didn't have the Fed that could print money. Well, you could say, well, they would create a CBDC, but it's like if Bitcoin exists, every single individual has the choice to opt into a form of money that's trustless, that's not controlled by their government, that can't be printed, or one that their government has entire control over. And the government isn't the one that gets barrels of oil out of the ground. It's not the one that builds pipelines to refineries to get gas in your car. It's not the one that takes natural gas and puts in pipelines to get to the combined cycle turbine to produce power. Like, people have to do that.
Yes.
And so in a world where people value those things and they have this stark contrast between currency A and B, no government control, no printing of money, currency, C, total control, total surveillance. Human beings are rational.
Yes.
So,
like what I was going to say is like, and if a currency does collapse in that type of fashion, there's a way lower incentive for the enforcement arm of the state to do any enforcing as well.
There probably is a desire to. There's an inability to, because you again have to pay your Gestapo.
Yes, exactly. And if the Gestapo doesn't, and if your money is useless, the Gestapo is not going to want a Gestapo.
Yeah.
So yeah, that's kind of what I was saying.
Agree.
Yeah. How do you feel about the presidential election?
It's crazy. Every time you think it can't get crazier, it gets crazier.
What are your views, man? I'm wearing a Kennedy hat. I'm trying to stay neutral. I think it's important. I think that Donald Trump talking about Bitcoin as well, he was the leading presidential candidate. Now, I don't know so much anymore with everything that's happening. But at the time, when the at the time leading presidential candidate is talking about buying Bitcoin, creating a strategic Bitcoin reserve, doing all of these things, which will actually help erase the $40 trillion worth of debt over a time period. It seems like it's a big deal and something to pay attention to.
I do think that this kind of sea change that's happened over the course of the last couple months that's normalized Bitcoin, at least in one side of the aisle, is a very positive thing, because it makes it very difficult to walk that back and then try to be more antagonistic to Bitcoin and Bitcoin holders, with just one side of the balance of power advocating for it and wanting to appeal and pander to those voters. I do think that, at a more fundamental level, like, everyone's talking about inflation, and anyone who's out there is experiencing inflation, and it's suffocating a lot of people. It's suffocating most people. It's making, I have a lot of savings. I've saved in Bitcoin for a long time. Every time I go to store it, it's impacting everyone. Everyone's like, what the fuck is going on, right? And so people are all talking about this problem, but until there's a serious politician that starts talking about the root problem being the printing of money, they're all kind of the same to me.
Yeah.
So I certainly would err to the side of, there's some real dystopian shit that the Biden administration has started to do over the last 4 years, and particularly now how the Democrat person who's presumably going to be their candidate,
Kamala, saying it's for criminals.
No, not that, but just like how she got anointed, not elected.
Yeah.
So I think that, and you got to err on the side of the people that are more friendly, even if they don't understand Bitcoin, to the people that are at least giving it lip service and pandering, versus the people that are actively attacking it. At the same time, if you listen to the talks, again, I don't think that RFK fully gets Bitcoin, and I've got some problems about energy, his approaches to energy, and because I think he's got some naive views of energy. I think he's coming around, though, to a more libertarian view. I would just say that I think he understands Bitcoin
better than all the candidates.
He gave an actual phenomenal speech. Now, I think he'll also go pander to shitcoiners, which makes me question his principles.
Well, so is Trump. He has a MAGA coin. And all of these conservative MAGA influencers, not to interrupt you, they, especially in March and April, when Bitcoin was $70K and the fear and greed index was at an all-time high, I was hearing all these guys just shilling their own bullshit tokens that are based on the Solana chain, instead of encouraging people to actually use better money.
It's a broken system. So, but in this world, you have to, one, live in it, but then two, try to change it. It's also logical. They're trying to get votes. The reason why they're in this is trying to get elected. And so, two things. It is significant that they're pandering to Bitcoin. It is generally makes more sense to go with the people that at least like don't view you as criminals. Nothing fundamentally gets fixed until people that are in positions of power figure out that it's the money printer, are willing to admit that, and then make some radical changes to fix it by adopting Bitcoin in a big way. Now, Senator Lummis took a big, step towards that direction to introduce a bill to, have the United States develop and acquire a strategic Bitcoin reserve.
Which is Fort Knox. It's Fort Knox in the digital age, yeah.
Yeah. And so, again, everything's a step by step. So we're moving in the right direction, but we've got a long ways to go.
I know, absolutely. One of the risks that I also think about too is that, while developing a strategic Bitcoin reserve, knowing the value proposition, if I wanted to pay off my debts in the form of $40 trillion, I would inflate the fuck out of the currency, knowing that I had a massive stockpile of Bitcoin that can be used to offset the debt that I have.
Yeah, but you also have to be understanding of who owns that debt, because
you talked about this in your book too.
Well, and what I'm specifically alluding to is if the federal government has $35 trillion of debt, then some of that's held by foreign governments. Some of those governments might be your adversaries, but public institutions also hold that debt. So think about public pensioners of state governments like TRS here, or the Wisconsin State Board, or ERS here in Texas. The Social Security Fund owns $2.8 trillion worth of dollar-denominated debt. So some of the debt is actually owed to taxpayers, and the reason why I view having that Bitcoin strategic reserve is valuable is that debt in the future will be worthless because it's denominated in a currency that's being inflated away. And a big way that the debt will be retired in a way that doesn't leave a ton of Americans out in the wind is that the obligations that are owed to them could be retired with actual Bitcoin, with money that's been storing its value, and then they can have actual money to spend in the real economy to get the things.
So that's another side of the coin. I'm just trying to point out as many variables as possible, because I think when analyzing the world around you and analyzing how to prepare for the future, it's good to see everything. Even if some of these propositions are super outlandish and unrealistic, it's good to air it out so that you can realize that perspective. How do you think about the price of Bitcoin? What do you think the impact of the price of Bitcoin will be versus a Trump or Harris presidency?
Ultimately, I don't think it matters.
I agree with you.
Yeah, I don't think it matters in the short term, because Bitcoin, the concept of fooled by randomness. It's like something happens and then people buy Bitcoin because maybe Trump gets elected and people think Trump is going to be more friendly to Bitcoin, so the price will go up. The only sustainable demand for Bitcoin comes from people who understand why it's
valuable. Yes.
Why it's valuable and has fixed supply.
Yeah.
And so any short-term moves will be eliminated, because if someone's buying it because Trump got elected and think they're going to be friendly, then there's someone's going to sell it at some point. Right?
Exactly. And if Kamala gets elected, a bunch of people might start buying Bitcoin too, because they're more worried about us turning into Great Britain, and then everybody just buys a bunch of Bitcoin either because they're more worried about CBDCs. Whereas if Trump gets elected, everybody buys Bitcoin because I think Trump's going to open up the floodgates and Bitcoin's going to go to $1 million. So I do think that the price probably winds up. I think the price becomes immaterial, if that makes sense.
The Fed is going to have to print money for very fundamental reasons. The Bank of Japan is going to have to print money. The European Central Bank is. That's the problem that Bitcoin fixes, and there's no way out for these central banks not to. And
unless
is there a world where one administration leads to more money printing than the other? I really don't think so. It's like they printed a shit ton of money under Trump. They're printing even more money under Biden. The thing is that they actually have to print money progressively as the debt problem gets larger and larger to be able to support the debt.
Yeah. So one of the things that I found fascinating about your book is the fact that our debt is literally based upon credit, credit owed to the to the Fed or the government or something like that.
To the Fed.
Yeah.
Or, well, I mean, like, well, the Fed buys debt to allow the U.S. government and other people to issue more debt, basically, is functionally how it works.
Yeah, and then eventually when, they try to kind of curtail that by raising rates to make it appear as though the money supply is contracting, but then eventually, nobody has any money to expand their business or grow a business or contribute to the economy, and then all of a sudden now they have to raise the debt spigot or like open up the debt spigot even more, and then the cycle just continues and continues while your money just loses purchasing power gradually, and then, like your book, suddenly we're all of a sudden we turn into a third world country. Don't know when that's going to be, but I just feel like as though that's kind of the premise.
Yeah, and the thing that's going to prevent us from becoming a third world country is having a form of money that works.
Yeah, like a Bitcoin reserve. And so my view is
but
that...
also people in the in the economy that have figured out that they need to save in a form of money that works so that they can continue to extract oil out of the ground, turn, derivatives of oil and gas into gasoline and power, and then we can build shit and get food to the grocery store. It's like it all stems from the ability of having a working form of money. And if Bitcoin didn't exist, then our money would fail without a viable backup. Because Bitcoin exists, we have a viable backup for when it fails, and the people that begin to save in it sooner have a bigger lifeboat, basically.
Yes, and it's also going to make governments a lot more localized.
Yeah, I think it's gonna make everything more localized.
More localized.
Like the size of corporations have ballooned because of the broken money system. If you think about Apple, I think an example of Apple Computer, wealthiest country in the world, somehow it's able to borrow from people at tiny rates. Who are all these poor people lending money to Apple at a few percentage points? It doesn't make sense. The only way it happens is because the money supply is centralized, it's broken, and banks can print money. So it also doesn't really make sense to, have things made all the way across the world and shipped over to you. So like the soundness of the money will cause realistically what it will cause is what has been a trend of centralization because of the centralized money supply to course correct, where everything will become more decentralized, and that generally becomes localized. It doesn't mean that there aren't going to be, big companies. It's just they're not going to control the wealth share that they do today, and it will. And the function is the centralized money is allowed these massive companies to accumulate resources that they wouldn't have otherwise been able to get, because they wouldn't be able to get loans to buy companies and consolidate assets at artificial rates that are only as low as they are because they're close to the money printer and somebody can print money.
And I think that we're actually, under a Bitcoin standard, we as a country or as a planet, right, become infinitely more prosperous, while the wealth gap between the haves and have-nots winds up growing smaller.
Yeah,
I think that is ultimately what winds up happening.
I talk about that in the last chapter of my book called Bitcoin is One for All, where I explain that inflation hurts people on the lowest end of the spectrum the worst, because they typically only have savings in the money that's getting debased.
Wow.
So 100% of their savings are getting debased. And that when, if somebody has a building and a bunch of money is being printed and someone needs to rent this building, then they can just increase the rent.
Yeah.
Right? But if you don't have assets to increase the price of, because you're on the lower end of the economic spectrum or just joining the economic system as a youth, then you can't ever get that. So basically, money printing is like inflation. Money printing is a tax, and it's a regressive tax because the poorest people only have 100% of their savings.
So I want to make a small micromanagerial correction to that.
Okay.
I don't think it's the poorest people. I think it's like the second poorest people, because the poorest people get government benefits that kind of wind up staying, relatively constant, where they get their food and their basic needs. It's like the school teachers and the construction workers,
But now we're just changing the definition of poor, because it's like you could be like, well, if you're on the government toll, you're fucking poor, So it's like if you have a fixed income and the purchasing power of that fixed system declines, you get poor.
You get poor, yes.
Right.
I guess
if you don't have assets that can absorb the increasing amount of money, it's like, think about Whole Foods. They increase the amount of money, people just go spend more. They increase their prices, more people spend more money.
Yes.
They can sustain themselves longer. Now, but I do want to say this: the printing of money is bad for everybody. It's not like in the short term, it might be better for the wealthy people and cause the wealth gap to expand. But when that currency fails, everybody is worse off because the things that people value in their lives start not showing up.
Yeah.
Things at the grocery store, the Ubers it becomes unviable for someone to drive their car. So I don't want to present this as like, this is like everyone is in this. Everyone, rich, poor, has an incentive to ship to a Bitcoin standard. The way I think about it is it's going to level the playing field, which will bring a lot of people up, and that will be a good thing for everybody.
No, absolutely. And I think what you just described, you're seeing the infancy stages of that with like the progressive prosecutors and the defunding of local law enforcement and not prosecuting violent crime and the humongous visceral increase in violent crime and degenerate behavior. And that does come as a symptom of currency being debased. And then when it gets debased to a certain point, there's no incentive to be a good human being.
Right. And if you don't have money, you're going to steal shit.
Yeah, 1,000%.
Right? That's why shit's behind lock and key at Walgreens,
Yeah, that's a whole other discussion.
And then that causes inflation. Right,
hey,
it does.
Yeah,
but
I got one more thing.
One more thing.
I know you grew up in Austin.
Yeah.
You're a Westlake graduate?
Not Westlake graduate, St. Michael's.
Okay. But you grew up in Westlake, right? Or in that area?
The Westlake school system, yeah.
Okay. Did you know Russ Albright on a personal level?
That's a good question. Ross was in my class, so we were the same age. We went to Westridge together. I knew him. I wasn't based on my memories. Like I knew Ross, but I don't remember socializing with him regularly.
Okay.
We weren't in the same circle, but in the same class. Like we were both 6th, 7th grade, and 8th grade. I think at same year at Westridge.
Yeah, I mean, because I think what's happened to him is a travesty.
Yeah,
right?
I think it is too.
You have a guy that created a business that was outside the purview of the government, accepting a better form of money, and granted, because it was just there was no real rules, you could just literally buy anything on that business. Well, people showed. You have porno on Twitter. You have like children being exposed and child predators like all over Facebook and Instagram. Mark Zuckerberg isn't going to jail for life, but they hold one standard for Ross Albright and another standard for,
I do think it's a travesty. I do think that, obviously selective prosecution, I think he was made an example of and even the judge said, that she viewed this ethos as dangerous. In reality, it's fundamental to America. And I think, hopefully, one of the reasons why I hope Trump wins is that Trump's promised to commute him.
And I actually believe that he will keep that promise.
Yeah, I believe. My understanding is that he was very close to commuting him at the end of his last sentence. I think he made a mistake by not doing it. I know that people close to Trump were advocating for it at the time, and now that he's made that promise, I believe that he will keep it.
What's making me sad about Trump is it feels as though he's like lost energy in his campaign and he's not campaigning as hard, and it almost feels lately like he's just trying to lose, and it's just.
I don't think so. I think that's the media manipulating you post Kamala. Like they want to create this perception that she has all this momentum because
it seems very astroturfed.
Well, right, but like if you see Trump's rallies, he's got massive stadiums full of people, like lines out the door. So I think like they're trying to feed you the news that like momentum has shifted. I don't think that's reality.
I think that it's okay. I have a job where I'm,
and he's going to like 3 different places every day. It's like, dude, like is 77, 78 years old. He has like more energy than I do. So I
hope you're right.
Yeah.
I hope you're correct.
But like that's like that sentiment. Imagine how like a week after he had that assassination attempt, you would have been like, home run, he wins.
Yo, he punched the
and
city.
then like 2 weeks pass, and you're like, it's like no, the programming has just fed you things that are like telling you like, oh, there's all these people excited, and it's like, what's more true, that they're liars and manipulating people's feeds?
Okay, well then if they manipulate these feeds, they can also manipulate election results. And
I mean, I think that's the bigger risk.
But here's the thing though: when it comes to manipulating election results, you need a margin of fraud and you need a plausible narrative. And this is still creating that plausible. Like I agree with you, right? Like it seems astroturf and artificial that she's packing stadiums, but in a close race, the tie goes to the runner, and by the runner we mean the Democrats, because the illegal aliens or somebody else or dead people or whatever it is are probably going to be the ones who.
Yeah, I think that there's yeah, you could be right. I think that it's a fairly like stark. I don't think it's going to be close. It might be. I'm not saying that Trump's going to win, but I think it will be obvious if they steal the election. So
I think that.
But in either case, to not go too off the rails, all that matters is really Bitcoin.
That's true. I lied to you. There's one last thing.
Okay.
What happens if the internet actually shuts down? Like if we get that massive Klaus Schwab cyber attack, how is Bitcoin still valuable? And I know like one thing I tell people is that, well, if that happens, then the only thing you should be buying are bullets and food and having a community of people. But
I think that's the right answer. The idea is we're still going to need money. Bitcoin will be the form of money that works best in that scenario. Absent things that are not.
And we saw the CrowdStrike thing, so yes.
That are not money, like ammunitions, when literally the shit's gone down. But the point is that Bitcoin, the internet was built to withstand nuclear war, right?
Was it?
Yes, it was specifically architected to be able to withstand nuclear war. Bitcoin is more resilient than the internet, and so if big swaths of the power grid go down, Bitcoin's mined at every corner of the world. The thing that's valuable about Bitcoin is this ledger, and when everything comes back up, the Bitcoin that hadn't yet moved are still there in everyone's accounts, and people in other parts of the world are securing it. And Bitcoin is the thing that creates all the incentive to basically make the power system work, because Bitcoin's the first consumer of power, right? Everyone needs the power. Money is what you need to pay people to get power delivered. And Bitcoin's more resilient than the internet itself, because it's all over the world. All the internet's together. So big swaths of it can go down, and you might not be able to make a transaction for a few days or a week, but system comes back up and everything works.
And you still could do paper Bitcoin worst case.
And if you were relying on JP Morgan certainly doesn't work, and even if you were relying on gold doesn't work. And so the point is that Bitcoin is actually more resilient than the internet. It's what will hopefully, or not hopefully, it will actually be what, because there's risks to the grid absent like an EMP or some kind of, it's functioning money that will create the economic stability that allows for things like power to continue to get to our homes and to have the internet. Like Bitcoin's more important to the viability of not the physical infrastructure of the internet, but you being able to surf the web than the web is to Bitcoin.
Got it. That actually makes a lot of sense. How do we get a hold of you?
On Twitter, Parker A. Lewis.
Okay.
And if you're interested in accepting Bitcoin as payment, Zaprite.com. And if you want my book, you can either go to graduallythensuddenly.xyz to find where to purchase it, or go to Saif Dina Moose's website, the author of the Bitcoin Standard. It's saifdean.com, or that's SAIFEDEAN, or thesafehouse.com. THESAIF house.com.
Okay. Dude, thank you so much for doing this, man.
Yeah, appreciate it.
All right, absolutely.